Good evening, ladies and gentlemen. Welcome to Reference Point. I'm your host, Dave Cokerhook. About a year and a half ago, we did a show on Reference Point that discussed the technology called blockchain. And we were looking at it from a variety of perspectives because what most people know of blockchain, or if they've heard that, they think of these what are called cryptocurrencies like Bitcoin or whatever. But the technology of blockchain actually has a tremendous amount of additional utilization. And the momentum for the usage of this technology has been growing very rapidly over the last 18 months. And so I'm very happy that we're going to do another show on that topic today. And joining me today from the East Coast, a couple of gentlemen from New Jersey who are the co-owners of a company called Envision Blockchain. We have Jason Pansis and Dan Norkin. Jason and Dan, thank you for joining me on Reference Point.
You, Dave.
Thanks for having us, Dave.
Yeah, happy to have you guys here because this is a very interesting thing. And I started this out by saying in the last 18 months things have changed, and you guys have been involved in this arena for a while now. So, what are some of the shifts that you're seeing in the perception of the technology of blockchain and the usage of the technology in the business world?
Yeah, I suppose, since we've been involved in the industry, there's been several different, I guess, pivots in the industry, if you will. Obviously starting from, I guess, one of the biggest, most pivotal moments, I guess, was, the ICO boom and bust that entered the market at the beginning of 2018, leaving 2017 after, I guess, Bitcoin futures were launched through the Chicago Mercantile Exchange. And that really propelled businesses in the enterprise world to have and take a serious look into blockchain technology. So that was, I would say, one of the first most pivotal moments outside, obviously, the inception of Ethereum, and of course, in 2009, the white paper from Satoshi with Bitcoin.
Right. So you mentioned ICO a few moments ago, and within the context of early 2018, which was about the time we did this last show. And we talked a lot about ICO activity at that time, but in the last, 6, 8, 9 months, I haven't heard as much or seen as much going on in that environment. Dan, has that changed to any great degree, or is it just under the radar?
Yeah, it's interesting because you take a look at what an ICO is, and I recall back on the first time that you did the segment about it, it was referred to as a crowdfunding exercise, and that's just kind of essentially where we still are today. Where these organizations or these groups of individuals that have a good project and need to get funding in order for this project to take off. There's been a lot of regulation and a lot of scrutiny around, the concept of an ICO. So there's, innovation in there currently to kind of bring it a little bit more, safer and a little bit more accredited, if you will, with the advent of STOs or IEOs or something along those lines, right? So they're, security token offerings or, initial exchange offerings.
Got it. Okay. But it's not just about, go ahead. I'm sorry, Jason, you were going to say?
Yeah, no, I was going to say, I guess just in addition to that, since the ICO boom and bust, and the onslaught of the interest that the enterprise organizations have had in the underlying technology blockchain, we've really seen a vast amount of adoption in various different industry sectors, from, agriculture and supply chain track and trace through even aerospace and supply chain track and trace. And obviously, it goes without saying that the financial sector with decentralized finance has exploded. We've literally seen, investment dollars, more than double in the past year in decentralized finance. According to some statistics, I believe, there was investment dollars of somewhere between 50 billion out to $100 billion in investment an investment that has gone specifically just into that sector alone,
Right.
Which ranges and covers a wide array of industries.
Now we have a few slides here, and there's one slide that we can show that right now if you can access it, Jason. It's the one about which industries are seen as leaders in blockchain, because you were just talking about some of these industries. And it's very interesting when you look at that, how the financial services sector is far and away the dominant industry that has been looking at how can they utilize this blockchain capability. And that's, it's followed by a few others: manufacturing, energy, healthcare, et cetera, et cetera. So what is it about financial services with respect to this distributed ledger technology that excites them? I'm going to guess that it's not about an ICO, a coin offering. It's got to be about something else that ties into other capabilities of the blockchain environment. Would I be correct in saying that?
Yeah, I think that the financial sector is really seen, has really exceeded all the rest of the industry verticals, specifically because, Bitcoin being, a financial use case in and of itself, was groundbreaking. But realistically, the concept of decentralized finance being across various different industry verticals, specifically in financial services, has really allowed many different organizations to cut out a lot of the intermediaries, which drives a lot of industry efficiency, and obviously helps out with industry bottom line. So investors are quite happy about that.
When you say cut out the middle, are we talking about as money flows from point to point, from a buyer to a seller or a lender to a borrower, that the steps in between where those funds have to touch are able to be reduced, and therefore it's not as expensive to perform that transaction? Is that what you're saying?
Yeah, so, instead of having funds pass through middlemen, if you will, you can literally send funds peer to peer, just like, at one point in time you were capable of only purchasing records or CDs or music through any one specific music record label entity. Along came Napster once upon a time and was, enabled you to download from other people around the world, where they were able to share those files. So in the same sense, that concept of peer-to-peer file sharing now exists in the financial world. So it eliminates a lot of costs.
Very interesting. Now, the other thing that's on that same slide that I found quite interesting has to do with what parts of the world are really diving into this technology. Clearly, the U.S. and China are head and shoulders above anybody else with respect to that. So, why is that?
Yeah, when you take a look at this slide, Dave, we can kind of think of it two different ways. So this particular picture came from a global survey that PwC put out, and what they're really showing in this infographic is, where are the blockchain leaders? They're not necessarily talking about adoption per se, but when you take a look at, the companies that are doing blockchain projects, both, in the public space with the public blockchains and, the permission blockchains or the private or consortium blockchains, you see a lot of companies, a lot of good thought leaders that are coming out of the U.S. that are headquartered out, New York City and Silicon Valley, and those kind of areas, But then we also see, out in China, for example, out in the Asian markets, they're not only coming up with, this kind of business entities and the thought leadership, but they're also adopting it. Just the other
Right.
day, there was news that came out that over the past 5 years, China was working on their digital currency, and now it's finally ready to go. So,
That should
you
prove
can
to be
attribute to
interesting.
some of that.
So
Yeah, it's
we
going to
can
make
come
things
out
interesting.
of the PowerPoint slide now. Go back to seeing you guys, which is there you go. That's better. So, well, that's really very interesting, and and it makes sense that that we're seeing that kind of momentum in those two major economic powers, the United States and China. So that's. And it'll be interesting to see where all that goes. But there are other uses for this technology. Now, you guys have done a lot of work in what you have referred to as smart contracts, right? And that's a little bit of a different take on how this technology is applicable than just a peer-to-peer transference of money. So can you talk a little bit about what actually is a smart contract and why is it significant? I'll give that to you, Dan.
Yeah, so the kind of simple way to understand what a smart contract is, right? So we kind of understand at some level what a blockchain is. Now, what a smart contract is, it's basically a program which is codified business logic, if you will, that you basically install or deploy to a blockchain ledger. So very simply put, you can consider it like a computer program in a way.
So how does it, okay, and all right, I get that idea of, it's like any kind of a contract, it's between parties, right? But is it why is it a better way to go? I mean, what are the advantages of that versus this traditional way that we've been doing things with? You fill out a piece of paper and everybody looks at it and they sign it and they send it, and maybe they do what they say they're going to do, maybe they don't do, or maybe the material comes or maybe it doesn't. What advantage does the smart contract offer the business person?
Yeah, so just kind of at the high level, what's really interesting about smart contracts is kind of down to what makes blockchain so interesting, and it's the decentralization of it, right? So there's all sorts of interesting technology behind that, such as consensus algorithms, but for example, if, let's say if there is a small business network, let's say of 6 different organizations, and they all agreed on how it is that they want their particular process. Let's take supply chain for an example, how they want their particular business process to run on. What happens is that particular codified business logic that we just described in the smart contract is deployed to a blockchain ledger, which is shared among all 6 of these different participants, if you will. So each organization knows that the program is going to work 100% to the way that they had all agreed, is the business process and the business rules.
And what's the level of security on that versus, because that's one of the things that we talk about when we discuss blockchain, and we talked about it in the show 18 months ago, and I know you guys, this is a big informational point, and in the conversations that we've had, it really comes forth, and that is there's a higher level of security and sense of confidence that you can put in the transaction when you're using this distributed ledger technology. And can you kind of refresh our memories here, as Jason, as to why that is?
Yeah, I mean, not to get too technical by any means, I would say that, encryption is not new to the world by any means, but blockchain naturally offers a built-in encryption mechanism, if you will, for each individual transaction, whereby, when you write transactions to the ledger, your address is your address. It has no specific ties to you per se as an entity, other than its actual, encrypted address point. It doesn't have an actual reading or a name on it. And you can encrypt information that you are interested in transacting within the ledger, and you can create various different levels of privacy within the ledger so that you can keep information from various different parties. So there's a lot of different options of privacy and security that blockchain has to offer. But I think one of the biggest points of discussion around security is the concept of decentralization that Dan kind of just touched on just a moment ago, whereby various different entities can host a copy of the same exact ledger across the world many different times. So it's kind of a series of redundancy, if you will, in that ledger, which really protects the state of different transactions and protects the validity of information that's hitting the ledger.
So I'm going to toss out something here, because when you just described that, it made me think about something that I'm not sure is an accurate representation, but I'm going to toss it out, and you guys can correct me here. But it seems to me we do, as consumers, we're doing a lot of transactional activity online with buying things over the internet, and where you place the order is not necessarily where the merchandise ships from, which is not necessarily where it was made, which is not necessarily who delivers it to you, and all that sort of stuff. So I'm getting the sense that as you are performing transactions, whatever they might be, either as a consumer or in the business community, that this kind of encrypted information in a ledger that it can't be manipulated maybe helps you feel a little more comfortable with the transactions that you're engaging in. Is that part of the deal here?
Yeah, it's interesting because there are already areas of blockchain security that we kind of like to address, right? So we can start at the very high level and zoom in. When we take a look at what you just mentioned, right? Essentially, it's a user would pay for something at a store, right? So what we think about as, the merchant is using a solution, right? So when we try to dissect an entire blockchain solution, there's a couple different components to that, right? It's not just the blockchain. So there could be different systems, there could be different cloud platforms, there could be different applications that you're using. And all of those have already passed a lot of regulatory compliances and have passed, if it's within an organization, have passed different penetration testing and so on and so forth. When we're talking about blockchain now, we're just adding a component to a system that you already trust. So there's different, just like Jason was mentioning, that there's different encryption techniques. There's down to the there's different blockchain ledgers that have different privacy built within that actual ledger. And then on top of that, there's a concept called second layer privacy, which further enables the security of how information is seen and how it's transferred. What's interesting to note is that you go check out the news articles, and what you see is that that there's been a lot of quote unquote hacks, right? But these hacks aren't the blockchain ledgers being hacked themselves. What they are, it's, let's say if you're using a website, say that website is then getting spoofed and people are misplacing their passwords or they're giving their passwords away. So in a sense, one thing that's really important when we're talking about security is how are we dealing with our private information? And that's kind of
that's a whole other topic. But that's an interesting point that you just made there, because I hadn't thought of it from that perspective, that these things where people are talking about, oh, it's not all that secure because this other stuff happens, it becomes a question of, well, where was the vulnerability? And it wasn't necessarily in the ledger. There appear to be more and more initiatives in the area. Different companies, Microsoft is doing their thing, IBM is doing their thing. I hear like Walmart or somebody is planning on doing their thing. So there, it kind of makes sense to me, but it kind of confuses me at the same time, because I get the idea that if you're going to engage in a transactional environment, that you are looking for the parties who are part of that transactional environment to be part of whatever this particular ledger activity is. But are there any standards? I mean, I remember back in the days when, you know, microcomputers were first coming out, and Microsoft had its DOS operating system, and every manufacturer had a completely different flavor of that. You couldn't want to run program on somebody else's computer because the operating system was somewhat different and all that sort. So there was no standards. Is there standardization occurring within this environment, or is it really always going to be discrete solution sets? How's that for a tough one?
That's actually a very interesting question. And, you know, our company, Envision Blockchain, is very active with the Enterprise Ethereum Alliance. We're definitely proud members there. And, you know, they actually just released and constantly release and constantly have meetings about different standardization specs internally. But a huge initiative that actually just released was the Token Taxonomy Initiative that various different entities are in support of. You should feel free to look it up at any point in time to understand the magnitude of the companies that are actually backing this initiative. But it's decentralized in nature, where, you know, these organizations, these enterprise companies that are backing this initiative are not necessarily just US based, but they're global. Which means that it's not necessarily just one government or one set of laws that are backing this initiative. It's the entire world. And it's the strength of all of these enterprise organizations that really back it around the world. And ultimately, these standards pertain to, let's say, a token taxonomy.
What is, I'm sorry, I don't understand. That term is a term with which I'm not familiar. Token taxonomy. What does that mean?
Yeah, it's actually a little complicated, I suppose. But it's the makeup, it's the composition of what a token actually is, and all of its behavioral properties. So when we talk about tokens, we can actually look in the physical world today and really recognize that a token can be a check, a token can be $1, a token can be a quarter, a token can be really a representation of any physical asset that exists that we know of today. And then there's behavioral properties that are attached to it, such as, you know, $1 can be subdivided into, let's say, 100 parts, or we call them pennies. Mm-hmm. Whereby, let's say, you know, your identity or your state driver's license can also be represented as a token, but it can't be subdivisible, and you shouldn't be able to transfer it, for example. Whereas $1 is subdivisible and can be transferable. So these standards are being produced, and there's definitely levels of standardization that are being developed across industry verticals, not only with tokens, but as well as with you know, different ledgers and of course different terminology.
Okay, thank you. That helped a little bit. So Dan, where do you see things, and we have like 3 minutes or so left in the show, where do you see this technology going in the next couple of years? And before you answer that, I've seen a tremendous amount of momentum and increased levels of interest and specific attempts to utilize this technology since I did the first show 18 months ago. Where do you see things 18 months from now?
Yeah, I mean, it's kind of an interesting question with depending on who you're going to ask and getting a lot of different answers. I think that a lot of it stems from exactly what Jason had, just mentioned with different standards and different, token behaviors, and being able to, as one organization is developing their own blockchain initiative, to be able to collaborate with another organization that has another blockchain, and basically creating different networks that interweave into each other. I mean,
Yeah.
we take a look at what kind of is the next big thing on the horizon, and you're going to hear a lot of things about interoperability around different type of blockchain, structures like hybrid blockchains. You're going to see, a lot of different projects that are disrupting a lot of different industries. And definitely it's going to be a lot more enterprise and, small to medium sized businesses that are going to leverage this sort of technology to gain new values and do things that in a way that they haven't been able to do before.
Very cool. I look forward to that. All right, I'm going to toss out one last thing. We have less than 2 minutes left in the show, and this is something that you see and hear a lot, and it ties back into how this whole concept originated with cryptocurrencies and governments' concerns about how they can manage, regulate, tax, and deal with this kind of different sort of currency structure. Where do you see that going? Are we going to see government trying to figure out how they can tax Bitcoin and Ethereum and stuff? Or is it going to be more of a global opportunity to exchange value based on a non-government regulated currency, global currency? What do you think?
I think that the exchange of value is natural to blockchain, period. With respect to currency, I think that the U.S. and I think that China and various different entities in Europe will have a specific amount of control over their currencies, and I trust that governments are going to, of course, make the right decisions in how they govern that specific situation, as they have in the past.
We can only hope. So, and I hope so. I'm getting the signal that we've actually run out of time. I thank you guys for being willing to dive into this topic with me, because, like I said, it's something that I think is really starting to catch fire in a much bigger way. So, Jason, Dan, thanks for joining me on Reference Point. And ladies and gentlemen, I hope this has been as interesting for you as it has been for me. And I appreciate your being out there and watching, and we'll see you next time on Reference Point.